Okay, so having gone through the fundamentals of investing in SPACs, next we'll go a bit deeper to understand what are the things to look out for when investing in a SPAC. So to really think about what are important factors to consider, I think one way that we can think about it is that the way we can look at SPACs and evaluating whether to invest in them before they announce the target isn't too different from how some people might evaluate a REIT. So as investors in Singapore, we are all very familiar with REIT investing. And often when we are thinking about which REIT to be investing in, we'll think about the REIT sponsors. Likewise, in this case, we can think about the sponsors of the SPACs. For the REITs, we are thinking about whether they are able to manage the asset well, whether they are able to find good tenants for the mall or the office asset, whether they are able to make good accretive acquisitions. So likewise, we can evaluate the sponsor of the SPAC. And the few things that we can look at would be whether they have the domain knowledge within the segment that they are operating in. So this is important because we will be able to understand whether they know the industry well, whether they have the network to be able to find good companies within the sector to be acquiring, and all of it would determine whether the SPAC is able to succeed or not. The next important factor is their experience in acquisitions as well as in the public markets. So generally, if the management team have previous experience in completing mergers and acquisitions, if they have experience in terms of bringing companies public, then those will be very useful in terms of making a good SPAC acquisition as well. The next thing to really consider is the sector focus. So one of the things that the SPAC sponsors have to do at the early stage is to actually specify which is the sector they want to be focusing on. So we can actually understand whether the sector has a large number of potential appropriately sized target companies that this SPAC would be able to acquire from. Last but not least, we want the interests of the sponsors to be aligned with ours. So we need to see whether the sponsor has sufficient skin in the game to incentivize them to work towards a business combination. So looking at how this translates to practice, what I'm sharing here is a study by McKinsey. They have looked at the share price performance of different SPACs and tried to classify whether the SPAC is led by operators or investors. What we see is that SPACs with operators at the helm tend to outperform those that are investor-led. And thinking back about what we discussed earlier, some of the reasons that this might be the case really has to do with the fact that the domain knowledge is important. So if it is operator-led, they might have better knowledge about the industry and to know which are the good companies to be acquiring from and being able to complete the acquisition from there. Okay, so those are the factors to consider at the early stage before the SPAC has announced its acquisition. Once the acquisition target has been announced, it's a different set of considerations that we need to think about. And in this phase, it wouldn't be too different compared to analyzing whether it is a stock that we want to be buying or not. So the things to be thinking about would be number one, company background, whether it is a company with very strong fundamentals, whether it's got a good business model, whether it is able to have a long-term sustainable plan to be able to grow within the industry. Number two, the industry outlook. So in certain industries, we do see stronger growth compared to the others. So if it is operating in an industry such as in electric vehicles, in fintech, in AI, then typically the industry outlook would be more positive compared to an industry that might be seen to be in sunset. The other factor that comes into play here would be the competitive dynamic, whether we have a lot of competition within the industry. Next, we can look at the management team. And here, remember what we are looking out for is the management team of the target. And this is different from the track record of the sponsors that we discussed previously. Next, we can look at the financial status of the target company. So it'll be things like whether is it profitable, whether it's able to earn a high return on its investments. We can actually look at its cash flow generation, whether is it able to generate positive cash flow, or is it constantly burning cash to be able to grow its customer base. We can look at its balance sheet, whether it is in a sound financial position, or whether is it heavily in debt, such that borrowing costs will go up very significantly once we see an increase in the interest rates. Last but not least, everything comes at a price, so we can think about the valuation as well, whether the valuation that the SPAC is acquiring this company at is deemed to be fair. This can be looking at various financial ratios such as price to earnings, price to book, comparing them to other peers within the industry, doing a DCF valuation, really different ways that we can try to ascertain the valuation of the company. So taken together, these different factors can determine whether the acquisition target is a good quality company or not, and whether it is something that we want the SPAC to be having a combination with. Okay, the third thing to really think about when investing in a SPAC is your opportunity cost. So one thing to remember is that while the sponsors are trying to look for a target, your capital is going to be locked up in a SPAC, and this is going to be in the escrow account. So then what we need to think about is whether we are okay with our capital being kept in this way, or whether there might be more attractive investment returns to be made elsewhere. If you think about 2021 as an example, say if you were to look at the returns of the average of the 3 Singapore banks, then on average they will have given a return of 25%. If you look at the Singapore index, the STI, the total return will be at 13.6%. If you're invested in the REITs, the return will be 6.2%. So the question is whether we see more attractive investment opportunities elsewhere, or whether we are comfortable with our capital being put in a SPAC while they are looking for a target to acquire. Remember, this process can potentially take up to 24 months or even 36 months if they were to ask for a subsequent extension. Okay, all investments come with risk, so we also need to be considering the risk relating to investing in SPACs. So we know some of the risks relating to investing in stocks. These are some additional risks that come through with SPAC investing. First and foremost would be the fact that SPACs have no operating history and assets. They are effectively blank check companies formed for the sole purpose of acquiring another company. So really, we have to rely very heavily on the quality and track record of the sponsors in investing in the SPAC. The next important risk to consider is the liquidation risk. So remember that some SPACs may not be able to find a suitable target to acquire, in which case you might actually lose some of your initial investment amount due to various expenses that may be incurred along the way. The last factor that I really want to talk a bit more about is the dilution risk. If you recall from the de-SPAC process that I discussed earlier, there are different investors that will come in at different points in time. So at the point of the business combination, we have potentially, say, the PIPE investors would come in to provide the additional funding for the business combination. So what this means is that as an investor of the SPAC, you will be potentially diluted through shares issued as part of the entire SPAC process. This can come through from the sponsors promote. So recall, sponsors promote is the shares that can be issued to the sponsors at a more attractive rate to incentivize them to find a good target. You've got the PIPE investors that will come in. And last but not least, you can have some of the warrants that are attached to the SPAC units being exercised, and that will once again dilute our holding of the SPAC. So having gone through some of the risks, the question to test ourselves is, which of the following can cause dilution for investors of a SPAC? A, exercising of warrants, B, sponsors promote, C, PIPE investors, and D, all of the above. Okay, the answer is D, all of the above. So remember that as an investor of a SPAC, there's always the dilution risk, and this dilution can come through from exercising of warrants, sponsors promote, and PIPE investors.